Hey everyone, it's Evan here from the Trade Risk on Friday, July 28th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we're going to jump right into the charts here today with the S&P 500, the SPY ETF. You can see down just slightly here on Friday, but let's look at that weekly chart. Dead flat on the week. You can see up 1 penny, but basically entirely unchanged here on the SPY. You can see we tried to push higher, tried to push lower, and ultimately closed exactly where we opened. Now on the weekly chart, we still have bullish trend, we still have bullish momentum. Things look good here from a longer term structural basis. Remember, we broke out of this multi-week range for about the second week of July, and you can see that was the last sort of impulse move in this market that carried us to new highs, and we're still kind of working our way, following through from that move just a few weeks ago. Now, if we go back down to the daily chart, we had some excitement here on Thursday, and it's something to pay attention to for sure. Nice wide range day with a VIX at 9 and a very sleepy summer trading market. We don't see too much action like this, and it definitely gets our attention. And there were some individual stocks that were making some pretty big moves on this day on Thursday. Importantly though, so we did take out intraday, on an intraday basis, we did make new 5-6 day lows here on Thursday, traded all the way down to the mid 245s, but ultimately we had almost a 2-point bounce into the close to finish up just down slightly on the day, and then here on Friday again just down slightly on the day with an inside session holding above Thursday's lows. So on the S&P 500, you can see here we're still above a rising 8 period, we're still above a rising 20 period. That's both bullishly aligned. We're right underneath all-time highs, and the trend is intact. So we saw dip buyers pretty much surface aggressively on Thursday. Will that maintain? Will that hold going forward? That's our line in the sand to pay attention to. So the lows from Thursday, I think this is a good spot to pay attention to. Prior to that, I was using this 245 level. So basically the highs here from this range and the lows, the pivot low from this Tuesday the 18th, that was basically my line in the sand here for the intermediate term. And now that we have this kind of sort of emotional day here, emotional low from Thursday, I think we could probably cheat it up and just pay attention to this level, and I think a lot of eyes are going to be on this point. So going forward, if we start to unravel, if we start to clear below here, I think from a short-term tactical perspective, if you active traders out there, you're certainly going to be taking notice. For you weekly traders or that longer-term time frame, still not a whole lot of interest until maybe that 244. If we broke back below this prior range here into that old range, I think that's the spot you'd start to take notice. But for now, action is contained, and for me to get more concerned, or for me to call this more than a shakeout, or for more than just perhaps keeping the bulls honest here in this uptrend, we really need to see that follow through. As of Friday, we didn't get it. Doesn't mean it can't come on Monday with some type of ugly gap down. Of course, that's, anything is certainly possible, but until we get confirmation or some extra follow through from this slight knee-jerk day, it's still kind of business as usual. Bulls are in control, bullish trend, so on and so forth. The other thing we'll be paying attention to, or I'll be paying attention to, is breadth, and so far nothing of concern at this time. So that's the S&P 500. If we go to the IWM, you can see staying a little bit weaker here into the close of the week. So you can see here down about 0.5%, a more meaningful sort of reversal. We pushed up higher. We failed kind of right at this trend line, kind of how it always looks up here, and we closed near the lows. We didn't take out the prior week's lows, but right underneath this 142 level, or right at this 142 level, and that again has been the upper end of this range that we were sort of in for basically all of June and July. So a little bit more of a concern here, but still above the 20 period. We had a position in the IWM. We ended up taking the loss here on Thursday, between Thursday Thursday and Friday. We got in here on this day, on Wednesday, on this breakout day. We got a nice, some initial movement in our favor, but not enough to a target for us, and we ended up stopping out right in here for a small loss. So we no longer have the IWM trade on. I don't hate it. I mean, I could easily see this finding support here, but for now, going into the long weekend, have other trades on, have other long exposure on. That's holding up better than the IWM right now, so we decided to close this out, but still, again, not all is lost here. If we can find support and hold this area, then we could very quickly be back towards these highs here. And then the NASDAQ 100 had the widest range out of all of the major markets here. All of the major indices had a pretty fierce kind of bearish engulfing candle that printed, particularly intraday when we were down here, engulfing the prior several days of price action. But you can see ultimately bulls again did step in, dip buyers stepped in, drove price off of those lows. The slightly bigger concern here with the NASDAQ 100, especially looking at this time frame over the past couple of months, take a look at where all of these high volume sort of sell-off days are occurring. They're all coming on down days and a strong uptick in volume. So that pattern isn't so attractive, and you can see the Qs really are kind of trading in this big box here, call it a 10-point range. We are, recently just broke out to new highs again, but not that far away from these June highs where we saw some big volume and selling pressure come in. So we just want to watch this volume here, these distribution days, and make sure we don't get too many more stacked up, because we already do have, at least a noticeable pattern here. So the NASDAQ has my attention, or at least maybe the more concerning of some of these major averages here, just given this volume pattern and sort of the way it's traded. Can't argue with price action, how it just quickly kind of levitates back towards highs after following every sell-off, but eventually that pattern will ultimately change. So I think going forward, though, really we're still looking at the same thing as the SPY and the IWM, these lows. The lows from Thursday, if we start to roll over here, that's a bit of a concern. You can see, given where we closed here on Friday, we're almost back under, right at the highs here from June. And again, I think getting back above here would be important for this market, getting back above the 8 period. And again, given the V-shaped rally we saw throughout July, some sideways here isn't a bad thing at all. And many of these companies were reporting earnings over the course of this week. So that's the landscape overall. Basically, I tend to like the SPY the best in terms of just the relative positioning of it. Qs have me a bit concerned, and then the IWM, if it continues to stay below this 142 level, that's a bit of a concern there as well. But all things considered, breadth, still not seeing any major divergences there, and those weekly charts on basically all the moving averages still in that uptrend, still holding strong, but we do have those nearby levels to pay attention to heading into next week. So with that, let's jump into some other markets here. TLT, which saw a nice bid on Friday, did manage to sell off over 1.5% or just under 1.5% on the week, though. So not a good showing on the weekly basis. Short term, we did get a bit of a bounce here right above the early July lows. This level is going to be pretty important. We talked about this in our midweek video. If we started to lose 123 and get back into this old range, then it spells quite a bit of trouble here for the TLT, as it potentially makes a new series of lower lows and lower highs here on the daily chart. So something to pay attention to. I think this is a pretty high stakes level. GLD saw a nice rally this week, up 1% here, continuing on its now 3-week stretch to the upside. You can see just very much straight line kind of V-shaped rally here, back up towards the June highs, working its way back higher. I don't see much of a trade in here for me, but the short-term trend is up. And for now, the bulls remain in control. Silver, very much the same situation here. We had a nice week, up 1.35%, third week in a row where we've seen nice price movement. You can see here on the weekly chart, we're coming into some of these fast-moving averages, so it'll be interesting to see how we act more or less around these levels. But again, short-term trend remains higher. USO, a very impressive week here as well, 8.89% to the upside, very impressive. You could see getting above the 20-period EMA, the first close above there since, well, I guess since May of this year. And again, if we go to this daily chart, we can see we almost got this, you know, if we take a look again at these rallies here over the past, you know, over the past several months, you can see we get these kind of the same sort of magnitude or same duration rallies in here on these rally attempts, and you can see this one here getting a little bit longer, taking a little bit more time, stretching a little bit more in length. So if this is anything like these, then, you know, we would expect this to sort of taper out more or less where we are right now. If that's going to kind of play out as these prior rallies have. If we zoom out here again, you can see we're starting to almost break this longer term structural trend that we've been in since the beginning, basically all of 2017, back to the downside. And again, you really do want to look at the underlying, you know, futures contract, look at the crude contract as opposed to the ETF if you want to really get a better handle on some of those important key levels of prior supply and demand. So USO short-term trend remains higher. Look, I certainly wouldn't want to step in front of this and just blindly short it because of this. Just something to be aware of as we've kind of extended on this similar magnitude moves. We do find some selling pressure, and this overall trend has taken hold. We'll see if that changes this time. You can see volume, you know, pretty steady as she goes, just trading right at that kind of average 50-day volume there on this March higher. So USO, extremely strong week. UNG, not so much. I mean, it was very flat on the week. You can see basically still just mulling around here in this sideways range, which again, I don't mind at all. I'd like to see this, you know, just continue to tighten up here for a potential breakout trade, either one way or the other. I'm not really, I'm not picky as long as it's clean and it's pretty clear when it starts to resolve itself. But something I'm paying attention to, again, right at these prior lows here from earlier in 2017. And I think that is everything. Let's get on to some of the sectors here. XLE was the biggest winner on the week. You can see on a sector basis, up 2.09% here on the week. We put out a blog post on Monday right here, basically talking about the potential bullish reversal trade here for XLE. We're looking for it to hold in, you know, essentially above $64, $65. We wrote about this on the Trade Risk. You can go read about it. And we got involved in it for a trade right here on the 25th. So we're still long energy. So far, so good. I obviously don't like the candle here on Friday on this fade, but sticking with it for now. Got the bullish trend or bullish moving average alignment here, supporting price below price. So I'm sticking with XLE, still have a position here. Going to see if we can get a little bit more out of it, but so far so good. XLF sold off this week, but back to sort of this, or had a nice pop this week, I should say. Had a nice pop early in the week and then sold that pop off back into this 20 period and some of this prior supply in here. It looks interesting again right here, basically where it closed on Friday. It did close higher on the week, up almost 0.5%. And if it can hold above this 24.60 level, these lows in here, I think XLF again continues to potentially work in this environment as it just continues to trade right underneath these prior highs. If it gets more follow through lower, if it starts to take out these 24.60, 24.70 lows, then you know, that certainly would be more of a concern, and I would no longer be as interested in financials. XLP fairly resilient here this week. I have no idea what this is. This doesn't look like a real print. Or at least I don't think it was a real print all the way down here. But you can see just kind of marching higher, got the bullish alignment cross on the 8 and 20 period. I mean, looks vulnerable, tough to chase it, but again, found some support right where it did throughout March, April, and May of this year. And, you know, something that held up well this week, I think up up about 0.5% here on the week. Utilities also holding up pretty resilient here as well. Get a little maybe pivot higher low that got put in right here on 52.40 or so. If it can hold above there, that looks like it would continue to act well going forward. On the downside, some sectors that look pretty vulnerable. IYT, although I don't know how vulnerable it is now, I think at this point it's really more of a mean reversion play to the upside in the short term, but very, very, very ugly action here with this session down 3% on this day as it really definitively kind of broke back below into this prior range. Now, of course, if you zoom out here, you can see still holding up overall, above 160, above these highs here going back multiple years. So IYT is still holding up from this longer term picture. In fact, you could almost maybe look at this as some type of inverted head and shoulders that I could be potentially carving out, or a similar pattern that looks like that. But in the short term, again, maybe some snapback here, just given how much this got capitulated on Thursday. But back below this range, I think you can certainly give it time. I don't think you need to rush in to get involved here. Ideally, momentum comes back in this, and bulls reclaim sort of authority back above 172 or so. That's really the bigger picture that I'd be paying attention to. I haven't looked at any of the components under here yet. There were a few hours tracking, so I got to see how they held up into throughout this week as I go through the scans for the weekly, for the end of the week. And then semiconductors also getting hit down a little over 1% here on the week. And notice the semis aren't right back to the highs here. They never got back to these highs like they were back in June. So unlike the NASDAQ 100 or XLK, you can see we're actually still kind of making like a lower high here, or potentially a lower high. If we see a rollover here, that would be pretty dangerous for the semiconductors, or maybe it just means we just need to consolidate a lot more. Really not that interesting for me, but certainly looks more interesting from the short side in SOXX. If it starts to roll over from Thursday's lows, you could use SMH2 if you prefer that ETF for the semis. And then finally, XLV sold off about a little over 1% today. Nothing major from a structural basis, but you can see got a little bit of a high volume day there over the past few days of selling, holding still above the lows here from the beginning of July. As long as they can hold above there, maybe this needs to consolidate before returning back to the upside. So those are the three sectors, IYT, SOXX, and XLV, that lagged on the week and do have some caution to be advised. So that is the recap for this week. Thanks so much for tuning in and listening. If you guys haven't yet subscribed to our channel, do so in the bottom right hand corner. Thanks so much for watching. Have a great weekend, and talk to you again soon.